Hi, my name is Heather with eXp Realty in beautiful Comox Valley and Campbell River here on Vancouver Island. And due to the state of the real estate market right now in February 2021, I thought it would be really important that we talk with a mortgage professional. And I have a very good friend that is an absolute expert with the Sea to Sky Mortgage team. My friend Eileen Craig has agreed to come and talk to us about mortgages today. So Sea to Sky Mortgages is a company that is based in Whistler, Squamish, and they service the West Vancouver, Squamish, Whistler, and Pemberton areas. Now, Eileen is also someone that deals with non-resident people that are getting mortgages today. So resident and non-residents. So she's just a wealth of information, and I was really happy that she agreed to join me today to share with us her knowledge. Hi, Eileen.
Hi, Heather. Nice to be with you today. So, yeah, we're going to chat about mortgages.
Yeah, so right now the real estate market is crazy, and a lot of first-time buyers and otherwise buyers that are moving up or down in the socio ladder of real estate are needing to refinance or get mortgages today. Can you share with us a little bit about what's going on?
Absolutely. I know you and I were talking the other day, and we were talking about just how many clients are ending up in a multiple offer situation and what's the best way for them to be prepared for that. And everybody's heard of a mortgage pre-approval. And so that's absolutely where you want to start. You want to get a mortgage pre-approval. But in our office, what we do is we take that a step further. We want to make sure that you are completely ready for that, for your purchase. And the way we do that is not only do we take all your information, but we get all your documents up front. When you do a pre-approval with your bank or with your mortgage broker, a lot of the time it's just filling in the application and the lender says, yes, this is going to work, Mr. Smith. You'll be fine to purchase. But what we don't want to have happen is for you to make your offer and us not have looked at any of your documents, because a lot of times you may have a job where you have bonus income. You could have any number of things that are different about your particular situation. Without looking at the documents, we don't know. So we want to make sure that when we take your application, we get your income, we verify all of that stuff right away. So we know what we're dealing with, and we can put you in a position where we know what you qualify for. We get as much information about the property. If you know you're going to make an offer, and we keep in touch with our clients, we make sure that we know all the details of the properties or the types of properties that you're looking at, so that we can have, information like property taxes, strata fees. We've got all that stuff in there, so that when you go in to make your offer, you're as strong as you possibly can. We're not worried about you qualifying. We're worried about the property qualifying.
Eileen, how long is a pre-approval good for?
A pre-approval is good for, a pre-approval is really, it's a bit of a misnomer. The bank doesn't actually look at your documents until we have a live deal. So generally what you're getting with a pre-approval is you're getting a rate hold. The bank is holding that rate for you anywhere from 90 to 120 days. The documents you send me are good for 30 days. So and even more so with COVID, being prepared up front is really important, because a lot of lenders want us to prove that your job has been consistent for that entire time, that that we really can support that income.
Okay.
So,
Eileen, what's happening out there when people are writing offers? I've been in several offers where we have bid $50,000 over the asking price, and because we had subject to financing, we lost the deal because the one that was accepted had 0 subjects on the offer. What does that do, and what kind of position are you putting the buyer in when you take that as an approach?
well, you are putting the buyer at risk, because if anything goes wrong and the financing doesn't happen for them, then there could be a problem. Often what we do if we know our buyer is really strong and we've verified all their documents, maybe you just put it in subject to appraisal. And in that way, you've given the seller the comfort of knowing that it's not the buyer that has an issue. It just might be their property. So we're saving the the buyer, they've still got a way to get out if things fall apart, but they've got a really strong offer in that case. If we know our buyer is really strong, we've looked at the property, we don't think there's going to be an issue, then sometimes people will make an offer without subject to financing. And it works, but there is a little bit of a risk there.
How much of a risk is there, Eileen, if the property goes 100,000 over asking price for that property to actually appraise out at the new value?
That really depends on the market. If other properties are going up that much, that's a risk then for your buyer as well, because what if that property goes up that much? Do they have additional down payment money that they may have access to? Because that's their issue. You know, maybe that if the property's gone for 100,000 over asking price, there's probably some value there, but whether there's $100,000 worth of value there, we don't know.
Okay, so now the buyer is sitting down with you to get these new interest rates that are extremely low, historically low, but that's a little bit of a smoke show in itself because the buyer still needs to be approving at a different rate. Can you talk about that?
Yeah. A few years ago, the government of Canada decided that we were all very heavily in debt, and we all that there was risk. So they decided that we needed to make it easier or not easier. We needed to make it so that the government was worried that if rates went up, people wouldn't be able to afford their homes. Although historically that is not an issue for Canadians, we don't generally default on our homes. They introduced a stress test. So everybody has to qualify at the bank's benchmark rate, which is currently 4.59. Now you might be getting your current mortgage at anywhere from 1.59 to 2%, depending on what you're getting, but you have to qualify at 4.59. So the rate you need more income to qualify for that higher rate, even though you're not actually going to be paying it.
Mm-hmm. And what about if I have more than, say, 20% down? Does that alleviate that stress test?
It does not. The stress test is applicable to everybody now. So everyone has to qualify at that 4.59 rate. There are a couple of exceptions. There are a few local credit unions that are credit unions are provincially run. And so because they're provincially regulated, they're not subject to federal regulations. So they have the option of charging the stress test. Some credit unions do charge it, others don't.
Okay, and so what would you recommend to a buyer today with the rates as low as they are when it comes to a fixed term or a variable? And what is the difference?
So the difference between the two is a variable rate fluctuates with our prime lending rate. So the Bank of Canada's prime lending rate currently is 2.45, and you're going to get a variable rate that is discounted off that prime. The amount of the discount is going to depend on the lender, but it's generally about prime minus 0.6, prime minus 0.7. So you're looking at rates of about 1.85. Some are lower. Now, fixed rates mean that you are guaranteed that rate for the length of the term. So a 5-year fixed means that you are guaranteed to have that 5-year fixed rate for 5 years. It's not going to go up or down. The big difference between the two is the penalty. So the penalty to get out of a mortgage on a variable rate mortgage is only ever going to be 3 months interest. So you pretty much can figure that that's going to be approximately 3 months payments. On a fixed rate mortgage, you're going to pay what's called the interest rate differential. And that's the difference between the rate you get today and what the bank can lend that money out at when you go to pay that money, when you go to pay that mortgage off. So, and different lenders will charge that interest rate differential slightly differently. So that's definitely something that you want to chat about with your mortgage broker when you're looking at mortgage terms. The lowest rate isn't always the best rate. And that really depends on what is it you're looking for with your mortgage? Are you looking to be able to prepay lump sums? Are you looking to have a better payout penalty when you go to get out of your mortgage? Different things, different products have different features and benefits, and you'll see some of these really ridiculous low rates, and often those come with a catch. That you may not be able to get out of that mortgage for 5 years, or you may pay a 3% fee to get out of that mortgage during the term. Mm-hmm. So that's one of the real big reasons to chat to your mortgage broker. We want to know what are you looking for in a mortgage product? What's your plans? Do you really want a 5-year term? Are you in an industry where you might be transferred? So we ask a lot of questions to try and get the right product for our clients.
Exactly. You said something that kind of sparked my interest there, Eileen. You said putting lump sums down on your mortgage. I have a question. With a lot of the people, baby boomers inheriting, there's over $50 trillion coming down in inheritance across Canada to baby boomers. Would you take lump sums and pay down your mortgage, or should you take that money and put it somewhere else at this time?
That's a good question. And that often is a financial planner question. But with mortgage rates being as low as they are, could that money be invested somewhere better? Right? With the rates being that low, if you're going to make money, it really depends what you're going to invest it in. Also depends on what the property is. If a property is a rental property, then you probably don't want to pay that mortgage down because you're making income on that. You're going to be taxed on it. So with a rental property, your interest can be tax deducted.
This information is really valuable, and it's not that there's a lot of information if you Google, and I did a lot of Googling and I found blogs and things were like from 2016, 2017, and things have really drastically changed with COVID-19, and especially in the real estate market in the last 3 months alone. I'll ask you 2 questions, Eileen. If I was a first-time buyer, what are the best tips you could give me right now?
If you're a first-time buyer, it would be to have your taxes done. It would be to get yourself a mortgage pre-approval and have an interview with a mortgage broker. Just doing the application isn't going to give you all the information. You want to chat to somebody. You want to find out what your options are. But really having your documents up to date is really important. As a first-time buyer, you want to be managing your credit, keeping your balances on your credit cards lower, making sure that all your payments are as agreed. You want to make sure that your payments are all up to date when you call your mortgage broker to do a mortgage application, because just being late on a credit card currently can drop your score significantly. And we're looking really at we're looking at your ability to service your mortgage, but we're also looking at your credit. As a first-time buyer, you haven't owned a home before, so you haven't established a relationship with a mortgage lender. So we want to make you as good a candidate as we can.
Excellent. And on that note, I think that maybe next week we should do another interview and talk about what you can do if you have bad credit, or if you're on that borderline of going through a divorce or lack of payments. And that would be a really good conversation for next time. Let's say I am a seller today and I have multiple offers on my property and they're coming in no subjects, and I know that some of them are first-time buyers. Should I be a little bit nervous about them qualifying to purchase my home when they've written no subjects?
I would hope that if they had written no subjects, that they had really been coached on what they were doing, and that was a really strong file. So I would think that no, you wouldn't need to necessarily be be concerned about them being a first-time buyer if I would hope that they'd done their homework.
Mm-hmm. Excellent. Well, I've really enjoyed talking with you, and I'm pretty sure that some of the people that are watching today feel a little more secure about what a mortgage is, especially here in British Columbia. I thank you very much. Eileen, I'm going to put all your contact information in the comment section below. If people wanted to reach out to you, do you do mortgages outside of the sea to sky corridor?
Absolutely. Yes. I do mortgages across BC, and we specialize in the sea to sky corridor. But as you mentioned, we do deal with a lot of non-residents. So we have a lot of experience with second homeowners, which I'm sure you probably see on the island.
Mm-hmm, most definitely. Eileen Craig is a mortgage broker with Dominion Lending. She is the broker owner of the Sea to Sky mortgage team, and we have been very lucky to have her share with us today a little bit about mortgages. Eileen, thank you very much.
Thanks very much, Heather.